Good morning, traders. Welcome to your 7-minute market update, utilizing technical analysis to predict direction based on human emotion. Today is January 20th, 2013. Lots to talk about, so let's get started. First off, I'm really not feeling very well, so I do apologize for not actually making the video yesterday. I was really out of it yesterday, so I do apologize for that. Um, and again, as always, thank you very much for watching these videos and hitting that like button. And it's much appreciated. It's pretty much what gets me to continue making these videos even when I am not feeling very well. Also, I don't think I'm going to be editing this video because I'm just too tired right now. So hopefully this video isn't too long, and I'll be able to get this over with as soon as possible. All right, so here's the cool part. What we did was we stalled out on the 147.05 level here, and it's just amazing how these calculated levels just work out time and time again. They don't always work out that good. I mean, for example, over here, it doesn't really necessarily work out that well. Uh, but these two here worked out very well. This one didn't work out as well as I would have liked it to, but you know, they do work. I mean, you can see it here, you can see it here. These levels, they do work. It's just sometimes they're not perfect. All right, so let's continue on here. At most, I'll probably press the pause button if I feel like coughing, like, and then I'll come back to the video. In any case, what we basically did was we went right into the 147.05 level, and like I said in the previous video, this was just a consolidation period. And like anything else, if you consolidate under any level, such as it did last week, that gives it energy to push through that next resistance level, which was the 147.05. Switching to the 10-minute chart on the 147.05 level, we could have had you could have very nice day trading trades here. Hit the 147.05 short, hit it again short, hit it again short, hit it again short, and so on and so forth until we break out, and the 147.05 now, if you look over here, becomes support. Right? Before it was resistance, and now it's support. Now it's going up. It's coming down. This is the 10-minute chart again. We have low, higher low, higher low. We have a high, and we could potentially be making a higher high. However, this candle here is a shooting star candle on higher volume. But keep in mind that last week was the week that options expired. And like I say in all my videos, when you have the third Friday of every month is that week, options will expire. And this was a triple witching week, which means options expired 3 times, threefold, and thus volume would increase naturally. So certain times, I mean, you have to trade based on volume, but not necessarily all the time. You know what I mean? You got to know what to watch out for. And options expiration, that week is always a volatile week, as such we saw. All right, switching back to the daily chart here. Let me just reload my drawings. Okay. Don't pay attention too much about with this line. Actually, I could leave that in there. What we want to look at is the 149.51. I've been talking about this level for the past, I would say, since January 3rd, okay? And today is January 20th. So for the past at least 2 weeks, I've been talking about the 149.51 level, saying that there's no guarantee we're going to get there, but if we do get there, there's a potential that I'll probably take a short trade. And again, if you're new, and I just saw a new subscriber here, if you're new to these videos, these levels here can indicate an intraday, like so, a multi-day, or a gap. Where's a good example of a gap? I know we just had one somewhere. Here. You see how we went up on Monday, and then on Tuesday, we gapped right into this 145.07 level, okay? In any case, this is why my strategy is the way it is. Yours may be different. There's no wrong or right way of doing something. If it works for you, it's great. These videos are just basically letting you guys know what works for me. Now, if we go straight, and mind you, we have to go straight, meaning we have maybe one down day is okay, but we have a straight up right into the 149.51 level. Then I'll be very, very inclined to take the 149.51 trade. In fact, to be honest, I already have a trigger on the SDS. Let me switch to the SDS here. This is the daily chart of the SDS. And I have a trigger for the SDS to trigger at 49.10. That's $49.10. Okay. Um, do I have any drawings on that? Yeah, there you go. $49.10. I got this calculation on the 17th, which was not too long ago. But I will cancel that trigger if this guy starts consolidating under. So what do I mean? Excuse me. Sorry for all that. What I mean is, if we come up and say we go right into this, my alert, which is 149 flat, for example, and we start consolidating, then this 149.51, I will no longer trade. Maybe in a day trade, but definitely not in a swing trade, because this guy will probably want to push higher, okay? It'll probably want to break through this 149.51, and if that happens, then I'll probably release another video indicating what the next stop will be. But as of now, a previous calculation made back in September of last year, September 14th, there's a 157 flat level all the way up here. Again, these levels aren't saying that the price is going to get there. These levels are created saying that if it does get there, then take the opposite direction trade, okay? So why do I think that the 149.51 is still a valid trade? Well, here's a funny thing. I mean, a lot of people look at the slow start, the RSI, and the all these kind of things, and they back. I think around here, to be honest, a lot of people were releasing a lot of videos saying to short the market, and unfortunately, the market pushed higher. And this is why I need to be, for myself, disciplined in the trades I make. Simply because if I'm not, and I go based on, what other people say or indicators that to me doesn't work for, then this is one of the reasons why I stay out of the market, even though people say to get out of the market. Granted, it's not that much higher. I mean, if you had taken a short trade at the 146, it's currently at 148, which is only a couple bucks, which is not too bad. But say you're trading Apple, or you're trading some other stock that actually follows the SPY, which tracks the S&P, you'll be losing a lot more. Well, and I guess it depends on how much shares you actually pick up. In any case, to make a long story short, you need to stay disciplined, and I just need to let you guys know that just because the market is in an overbought state does not mean that there's going to be a pullback. It just means that you need to be cautious and ready, if you are long, that there might be a pullback coming. And what you do is you look for the reversals, signals, okay? Now I'm going to get into that right now. Just imagine that this candle here was no longer here, and you just looked at this candle, and what you would have seen is this candle is higher in volume than the past 3 days. In fact, it was higher in volume since the past 4 days. And you guys know how I trade. If there is a reversal candle on higher volume, and that is the candle that is normally indicating a reversal. This is a spinning top candle. It could potentially have signaled a reversal, but if you guys watched my previous videos, this is not considered a pivot point. Okay, this is merely a consolidation point, which basically tells you, okay, that it wasn't 1, 2, 3 candles up and then a reversal candle. It was 1, 2 and then a reversal candle. This is also another reason why I stayed out of shorting this trade here, even though it's already into pretty close to some resistance. Sure enough, the next day it made another candle. But here's the interesting thing: this candle here, which was on Friday, could not close above Thursday's candle, which indicates some potential weakness, and it did it on higher volume. But again, this volume is probably due to the week being the week that options expire. Okay, so I'm still sitting in cash right now, waiting for it to hit the 149.51, and again, it would have this would indicate 1, 2, 3, maybe one more, 4, and then maybe fifth candle into the 149.51. If it goes straight up in there and it creates some sort of doji candle such as that, and we get higher volume, then we're good to go. Now keep this in mind though, the volume in this case would not matter too much, but what would matter is that the pullback that we do get is not going to be a major one. We may come back into the 147.05 before pushing higher into the through the 149.51. Again though, there might be a potential that we may actually consolidate first before breaking through the 149.51 level. So just keep that in mind, that just because it gets into the 149.51 level doesn't mean I'm going to take the trade. It really depends on the pattern and the reversal signals that I get. Okay, what I like to see is volume decrease while the market's going higher, decrease again while the market's still going higher, decrease again while the market's still going higher, and then bam, another candle, another volume spike. You see how it goes down and then a spike, but that spike is a reversal candle. That's when I take the trade. Volume is higher than the past 3 previous days. We're overbought, we're in resistance, and then I'll definitely take the trade at that point. That's your picture perfect type of trade. Okay, now you notice this volume is going higher, market is going higher. That is okay. You see how that's fine. It's when volume decreases and then you get a spike in volume, right? Then you got your reversal. You see how that works? Let's see if I can see something else here. Again, you don't have to do or trade the way I trade. It's just what works for me, and that's it. So that's pretty much it. However, keep in mind that the markets are overbought, so there is a possibility that we may pull back, but it's not enough for me to actually take a short trade, just basing it off the fact that the markets are overbought. We are already, what was the high of this candle here? Was 148.11. The close of this was 148.33. So we are in new highs right now. And again, I talked about this in, I believe, last week's video, that we may actually punch through and make higher highs, and that's due to probably the manipulation that we have, and especially that it was options expiration week, and that's probably why we broke through. And I wouldn't doubt that we get to the 149.51 hopefully quick, and then I can take my short trade. And as soon as, and because, oh yeah, that's one more thing, and because it may not be a strong pullback, as soon as it pulls back, meaning if this is just an intraday trade, for example, and it just pulls back intraday, as soon as it pulls back intraday, I already have a break-even stop. So if it does go against me, so say we go right into here, the 149.51, and then we start pulling back, I already have a break-even stop, right, to protect yourself. And say it goes against me and it breaks through this 149.51, and I'm forced to calculate another calculated level, which is fine, not a big deal. I get stopped out, break even, and no sweat off my back, and that's how I trade. Low risk. Okay, and let's just say it doesn't pull back at the 149.51, because these levels aren't 100% guaranteed. Nothing ever is. Then it's simple. I have my stop, and I'll probably calculate the stop depending on what the candle looks like. But more than likely, I would probably have my stop around the 150, just a 50-cent loss. But I'll update you if that changes. Okay. Alright, I can't end this video without responding to some questions. Favco, thank you very much. Unfortunately, I don't feel better than last week, but I do appreciate you for your kind words. And you're asking about Apple and the XIV, the backwards VIX, so or the inverted VIX. Alright, so Apple, I know in the previous video I said that the 476.39 level is no longer valid, and the reason is Apple has just been pretty much trading sideways for the past, I don't know how many days here, if you just take a look at this, right? And basically what Apple has done was after, let me just kind of zoom in here. Let me see if, oh, that wasn't good. Hang on. Okay, well, anyways, Apple is just pretty much basing for the past few weeks, like so. And basically, what happened was this broke down, okay. And right now, it's basically just retesting what used to be support and is now resistance. So Apple is showing a lot of weakness, but one thing that you have to be very wary about, and this is again just my opinion, a lot of people trade very well during earnings, but Apple has their earnings on the 23rd, which is next week Wednesday, or this coming Wednesday. Okay, so remember now, Monday is a holiday. Markets won't be open tomorrow, so already it's going to be a low volume if people are taking off from work. But it's not a major holiday in my opinion because I have to work. But Monday is a holiday, so Tuesday and Wednesday is already going to be Apple earnings. A lot of times right before earnings, especially stocks like Apple, they become very volatile. Sometimes they can get volatile intraday, and sometimes they can be volatile for multiple days. So just keep that in mind. It's funny how Apple actually bounced right off of my support line here, this diagonal support line, which you guys saw me draw in the previous video. The support line comes from here on the weekly chart. Okay. In any case, the 476.49 level did not get hit, but I had already canceled that trade in the previous video. So one thing that you want to watch out for is because, I mean, I'm not saying that the 476.39 will still not hold. There is a possibility, but with this earnings coming up on Wednesday, I mean, you can have support, you can have major support, major resistance, you can have really, really strong support, really, really strong resistance, and then earnings comes out and it's like it doesn't even matter. Moving averages won't matter. Pivot point, support and resistance lines will not matter. Fibonacci retracements will not matter. Unfortunately, nothing is going to matter when it comes to earnings simply because that's how powerful earnings could be. Now, if earnings are good, like it blows away expectations, then no support or resistance is going to hold. If it's way under expectations, again, no support's going to hold. If it's right in the middle, right where expectations are, you still can have a lot of volatility if the expectation of the traders themselves were a lot higher than what they expected, and therefore you get a drop. Which is why, if you want to go to Vegas and you can't afford it right now, then trading earnings is the best gamble in my opinion. Because if you do choose the right direction, then you can make a lot of money. But again, you can also lose a lot of money, which is why I don't trade earnings. But at the same time, it's a 50-50 chance versus Vegas. You probably get a 55-45 or 50, I'm sorry, not 50, 40-60, that kind of thing. In any case, right now, Apple is not something that I would look at to trade. Not right now. I wouldn't even make calculated levels just yet until after earnings. Maybe a week after earnings, around here or so, see what happens. And then I'll get better data for another calculated level. But until that happens, I want to stay away from putting anything here online that could potentially give people the wrong data and make the unfortunate wrong trade based on that data. So I apologize. I just try to stay away from Apple as much as possible. However, let's just say earnings were not here. Earnings were not here or so close. Just by looking at this chart, Apple does look weak. I mean, the trend is definitely down. We have high, lower high, and lower highs. We have lows, and we continue to make lower lows, except for this one here. So this means that the trend has changed on the daily chart. Now switching to the weekly chart, what does this look like to you? You have a down move. We have this consolidation pattern. We have another down move. And now we have this beautiful just sideways consolidation pattern for another potential down move. Okay, so keep that in mind. If anything, there's a possibility that this 200 moving average could hold for a nice substantial bounce, but that's all the way down, so I don't know if it even gets to that 200 moving average, but it's just something to keep your eye on. Another thing is, because Apple is showing weakness on the weekly and on the daily, again, earnings can just turn that trend around. It can, make it from a downtrend straight into an uptrend with a snap of a finger. So just watch out for that one. All right, this is a chart of the XIV. I completely forgot about this. So I had a level here at the 1535. Made this on December 21st of last year. Looked like it held up pretty well. I really like that. In fact, what I really like about this here, and this is a really good example for those of you who just started watching. This calculated level went right into it. Beautiful reversal signal here, which is an engulfing candle, and it happened on higher volume, higher than the past 3 days. And then we had a pop, and it looks like it's just floating higher. This is the daily chart. One thing I like about this chart is that it is above all the moving averages right now, but it's not, the moving averages aren't curving up. I mean, these two are, but the 200 isn't really curving up too much. What I like to see is the moving averages curving upward, and that validates any type of trend going higher. The trend is obvious on this one that it is in a uptrend, right? That's pretty obvious. But keep in mind that this guy might be turning over shortly. Let me try and get you let me try and get you a calculation for this. Give me 1 second. Okay, so here's the thing. I could not get a mathematical calculation from this. The data is not clear enough. And what I mean by that is, it's not that I'm not trying to not give it to you. It's just the calculation will not spit out a number higher than the 2149 level, which is what it's at now. That basically is telling me that this thing is getting overextended and needs to pull back. Doesn't mean it's going to, but there's a stronger possibility that it may start pulling back. I would not take the trade based on that, simply because just because you're in an overbought situation, and there's no real overbought or oversold in this case, but because of this index, but it's more of a how should I say, per price it needs to pull back shortly. Let me just see here. Yeah, maybe it's got some ways to go, maybe a little higher before it pulls back, but yeah, my calculation does not pass the 2149 level. So in fact, interestingly enough, that calculation is around here. So it would have been good intraday pullbacks for that calculation, but anything after this, I don't have data for. In any case, it is what it is. It is still in an uptrend. You can't deny that. So that's still showing strength. It is above all the moving averages. I can't get a calculation from it, but that's fine. One thing I don't like is this pattern. This is just a float higher. You know, when you see patterns like this, it's just a float higher. Normally, when you see these kind of patterns here, you expect a breakdown, right? That makes sense. At least into the moving averages before we get a pop higher. You know, something like that. And when you see a breakout of something that should be breaking down, then when it does break down, then it's going to be a lot stronger. But I think for now, it's still in an uptrend, so it's still showing strength. And so for now, I wouldn't take a trade, basically, if that's what you're asking. Like, I wouldn't go long or short on it right now. It's way too overextended to go long, and there's nothing telling me to go short right now other than that it's overextended. But that's not enough reason for me to short anything. Yeah, it's even broken out of this upper trend line here. I think this is a fake thing in my opinion. It looks like it could be a trap. But again, it's just my opinion, so it's not guaranteed to happen. In any case, I'm into 25 minutes. I need to go lie down, but again, thank you very much for taking the time out to watch these videos. I appreciate it, and I hope to see you in the next